Welcome, and here we're looking at the US dollar on the 2-hour chart here, and we're still considering, even though we've had a bit of a spike in the market, we're still considering this the wave 4 here. The ADP figures that came out last night were under the expectation, and that causes weakness in the US dollar and strength in the euro. And also we've got the non-farm payrolls figures coming out on Friday. They're expected to be strong. However, the ADP figures are a very good lead into what will occur on the Friday for the NFP figures. So this market and the euro are really reliant on what's going to occur from those sort of figures. So expect spikes in the market there for Friday. So if you're trading either this market or the euro here, which we're also looking for wave 4 to be in place. However, that will spike in a particular direction. Expectations is for strong figures for the non-farm payroll, but whatever comes out of the gate comes out of the gate. So you're really going to have to, if you're trading these markets, is to have all the orders already set in the in the market there. But as it stands, this wave 4 has met the 38.2 retracement level from wave 2 up here in this area through here down to here. So we are looking for it to fold over further, but the markets are going to be quiet coming into that particular NFP figures. The Australian dollar here, I've just got the alternative account that we were talking about yesterday, but either way we're still looking for 5 waves up through to here to complete here. There will be a reaction here, so just drilling into that here. This does appear corrective here, but I guess that we've got here. As long as if the market moves below the 88.72, then you got weakness here. And if you're going to go long, then you want 89.30 as support. You could do it off the 89.20, but it needs to be tested support, not just a spike up, but coming back and sitting on it, then look to add on to the 89.30, so that way you can scale in and manage the risk better. But this yesterday we had this wave 4 here, and looking for wave 5 up through here, but this move up through here is just in 3 waves. So that's why we've got to put that as a B wave and put this over here as a C wave. But we've just got to be a little bit sort of careful, because this particular move up here is also in 3 waves as well. It can be the 1, 2, 3, and 4 here, but then it's got to push up from here. So a move below this level here creates overlapping wave structures and weakness, and then we would have to look at this as being 5 waves down, 3 waves back up, and 5 waves developing lower through here. But as I mentioned, the short would come at 88.72 as retested resistance, and longs would come at 89.20, or better still 89.30 as support there, and then looking for a stronger move to the upside. So we've had a strong move up through here, and the market is creeping, and we're just trying to determine if this is corrective, and if so, then we'll be going up. But these are the trade setups on 20 and on 30, and the negative market here on 88.72. The euro Australian, just on the weekly here, just want to point out that that the market's come down off its high here, as we know, and this is the medium level 150. Now, the important thing here is that that we're basically in corrective patterns for quite some time now, in terms of the A wave, the B wave, and so forth. So, and this is what we're looking down here, the wave 4 of 1 lesser degree. So, we're looking for something like this here as such before we see any further sort of upside here. So there's quite a long time of corrective patterns here. So what you see here is is not what you get over here in next. So if you see a strong trend, that's not what you're going to get next. The market is just trends and corrections, trends and corrections, trends and corrections of various degrees, or different degrees and structures. So always expect the opposite. That's why we look for corrective patterns to mature to catch the next trend, so to speak. So, but anyway, drilling in from that point here, the way we're viewing this so far on the 2-hour chart is from that high up here. We're looking at it as an impulse wave to the downside in terms of wave 1. It could be an A wave as well, but for the purpose of this, we'll leave it as it is. 1, 2, and then we've got in the third wave coming down, and that could be an A and a B, and we'd still have wave 3 coming down here. So 1, 2 here, and then the third wave all the way down to the 150 area through here, and that would be in 5 waves as well, in 1 and 2, 3. Oh, sorry, 3. Oh, so we're in the third wave here. I should have had this labeled here, but down for 1, back for 2. I'll just go into this one here, but basically this is just a small little wave 4 here that's unfolding, and that can move a little bit higher. So the A wave, the B wave, and the C wave moving up here. This looks corrective, so we can go higher through here. And it's good if we do go higher through here, and then if it a little bit like this here. It's good if it tests higher and then finds it as resistance here, then you get the short trades. The same again here as well. If we do get a test higher here, that's good. And if it fails to find support there and it becomes more so resistance, then you know that you're on the right track to shorting from that point. So just on the 5-minute chart here, this does appear corrective here, so we'll see another move up through here. So yeah, allow it to happen. If you're going to go long, then you can go long now and put a stop under here, and then look to add on top of the 52 here. So short trades would come in at the 151.50 here as retested resistance, and that will take you down all the way down to 150. There will be a bounce off the 155, of course, but just navigate that. That will come down, and it'll be an A and a B, an A and a B and a C, so forth. But look, essentially just waiting for this corrective pattern here, this A wave, A, B, C for the B wave, and then the C wave further up to finish here, and 151.50 as resistance would be the telltale signs of this corrective pattern finishing. Okay, the pound yen. Once again, we're still in, yesterday we were looking at being in a 4th wave. We're still in the 4th wave, but it's just maturing more now across the 165. So now that it's above 165 again, when the 165 becomes the retested resistance, then look to short to the downside, and we're looking down for 1, back for 2, down for 3, 4 and 5 further down through here. There is the case that this is just a 3rd wave and 4th wave of one smaller degree here, and we're not in the 3rd wave, not in this 3rd wave just yet. And when we look at that in here, I need to do some more work on that as well, and this is it here. So I have relabeled it the other way, but either way, we're still in this A, B, and C wave here that can come back up to the 38.2 retracement level. I've got 2 retracement levels here, one at 166. 166. Oh no, that's right there. Yeah, 166.75 here for this one. So while it's above this level here, you have to look on the long side, but don't expect it to go too far. And the short side would be here. By the time this finishes in the next session, we'll have a good idea of the 5-wave structure that's unfolding up through to here. The euro yen's the same as well, same pattern of this retracement level here. This lower level and the upper level here are both 38.2 retracement levels. They're just taken from 2 different particular highs back up here, but I won't go into that at the moment. But what we want to see is it come back up into this supply area through here, the wave 4 of 1 lesser degree, and look to fail from that point there. So keep an eye on that. All right, cheers.